take a look at the market today for May 8th, 2025. And it was overall a positive day on the back of the UK-U.S. trade deal. Now, the UK didn't have much tariffs on us before this. This still maintains a 10% tariff on almost all UK goods. But it is a trade deal. It's good optics for both sides. Overall, it doesn't really matter too much. It's really about the European Union and China. Those are kind of the two main ones that you have to focus on. There's all these other side ones, Japan and all these smaller countries, frankly, don't mean a whole lot. So interesting, the market reacted positively. You had a lot of the Mag 7 up, Google up nearly 2% after a big sell-off yesterday on the back of Apple likely pulling them from the default search engine on the iPhone and replacing it with some AI features. So that was a bit of a bounce back there. But you also had Amazon, Tesla, those were positive. The weakness, though, was out of healthcare. Eli Lilly down 3%, Merck down nearly 2%. So definitely some weakness out of the drug names. You also had communication services. So AT&T, Verizon, and T-Mobile were down. But mainly this has to do with higher interest rates. And that was underappreciated today. We had a green day on equities. It did close well off its highs, so that's of note. But what was under discussed was what happened in the bond market overall. If you take a look at the 2-year, that was up. Let me refresh my screen here. Just want to get the updated data. It's not giving me it, but I know overall the bond rates were up, especially in the back end of the curve, 10-year, 30-year, up over around 10 basis points or so. And so this was underappreciated. Go look at IEF, TLT; those are selling off almost all day. And if you do get a breakdown once again in bonds and higher yields going forward, that's going to weigh on the economy, markets, etc. So I'll be watching for that. And that's one of the reasons why you had those telecom service companies really, really hurt. So that was the market for today. On the news front, or the economic front, you had initial jobless claims that came in at 228,000, just lower than the 229,000 consensus. Continuing claims, those came in a bit higher than consensus. And that continues to kind of trend higher. So the labor market not falling apart, but definitely weakening since Liberation Day. The big news really was on productivity. It was down 0.8% in the first quarter. That was much higher than the expected 0.1% decline that analysts were expecting. So not good for profitability in general. You want productivity to be rising, not falling. So that was of note. Across the other parts of the market, you had, let me pull this up here, dollar index, that was up 1%, so a strong dollar, and that pushed gold down 2.5%. Bitcoin was up 5.3%. That has been positive as of late. And WTI crude ended up 3.1% despite the stronger dollar. And so that was the market today. Underappreciated, like I said, the long end of the curve really, I don't want to say blowing out, but finding a decent sell-off. And, as we head up into this resistance on the S&P, the major indices, it's going to be very interesting to see how the market reacts at that level. Around the 5,800 on the S&P is major resistance. And you got that today. We closed at 5664 on the S&P. So there still could be some more upside in the near term, but ultimately it's going to be much harder from here as you reverse pretty much all these sell-off from the Liberation Day losses. And that means we're in a choppy environment. Very strong rallies happen typically in a bear market. And I do think we are in one in general. So that was the market today, and we'll see as we go through this week.